results in conflict. Suppose if I own shares of a company, if I do an audit, if something goes, the results are going down, it could actually affect me as an investor. Okay, my interest is affected, so there is a conflict. Okay, when it comes to a relationship, suppose if my relative is there in the organization as in a big position, and if I am doing an audit, there is a personal conflict. It's a conflict of interest. Okay, if you look at the self-review thread, if I have done some work and in respect of it, I am also reporting on the work or the data which is being done by me is included in the statements, which either I certify as in respect of an assurance work or I certify as an auditor, there is actually a conflict between the work which I have done in one capacity and the conflict which I do as an assurance or an audit service provider. But this code is going actually further down on conflict of interest. It talks about the objectivity and other principle which could be affected by the conflict between interest which you are undertaking. For instance, if you have got if you are doing a financial advisory services and you are doing an audit services, suppose you have advised a particular client to acquire, okay, for acquisition, then if you are doing an audit of that particular client, that could be a conflict of interest because you have advised the client to take over that company saying that, oh, look, this financial position is good. And tomorrow, when you go and report on those same figures, there could be a conflict. You may not be doing audit work at all. Okay, there could still be conflict. Suppose if there is a bid which is happening and you are an advisor to two organizations in respect of that bid, there is a conflict. Because you are supposed to advise the client in the best interest of the client. Now, if both of them are looking at the same bid or both of them are pitching for the same particular contract or work, now how can you do justice to two different people? Okay, there could be a conflict. Okay, there is a conflict of interest. This needs to be means that you should not undertake that work, or if you undertake the work in certain cases, there needs to be a safeguard built in. Or take the case of some acquisition. You cannot advise the purchaser as well as the seller. For instance, you could be a tax advisor to the seller, and you cannot go and advise the seller doing a due diligence services, including tax, because you are the tax advisor. Okay, and as a seller, you cannot do a conflicting job on reporting on the tax positions or the tax liabilities or the tax demands which could happen in respect of the company which is being sold. So when you are undertaking this work, we need to be very guarded to ensure to safeguard this conflict. In fact, so many cases which has gone wrong, this conflict of interest has been thrown upon. Okay, like certain cases, conflict of interest is also a very specific thing for prohibiting certain services. In fact, when I come to Companies Act, I will explain one or two. Okay, now these are the conflicts which needs to be taken care of. As a professional, you have to ensure that the conflict of interest is safeguarded or you do not land up in a position of conflict of interest. Okay, it's very important. Now, the other thing which I will not deal in detail, but I will mention this, the new thing which has happened, the new change which has happened in the code, which was not there, which was there in various acts internationally. Okay, for instance, in US had a law, UK had a law. Okay, they have a specific act which is applicable to all the service provider of a particular listed entity. Okay, not necessarily auditor. Okay, but to all the service provider. Now, what this means? Now, if you look at it, responding to non-compliance with laws and regulation during audit of listed entities. This is going to be, this says now, it's there in the code, it is deferred till 30th September, I'm not sure. They may even defer it further if there is not enough education which not happened, or a practical what you call application of this law in respect of the professional. Just they are not yet ready for that. It could even be deferred. Certain big firms have been working on this for the past 2-3 years. It is a big challenge. Okay. Now, let me look at it. As a professional, you may be doing a tax service, you may be doing an advisory service, you may be doing a management advisory or management consultancy work, you may be doing an assurance work or an audit work. You may be employed in many positions, or you may be actually being employed in an organization. Okay, this particular thing is applicable not only for the practicing chartered accountant. It is actually, according to me, when I look at it, when I was looking at it in detail last couple of days, I find our brethren who are there in the industry who are going to be much more affected by this code. In fact, this is applicable. It is there in the standards which are applicable for professional in service, because they are inside an organization. Okay. If I am outside an organization, I may say, look, I have not come across this non-compliance, or I don't know whether there is a non-compliance there or not. Okay. But a person who is working inside an organization, especially who is in a position of what you call a senior professional accountant, it's actually defined, a senior professional accountant, like a CFO or a CEO or a controller who is there, who will be privy to all the compliances within an organization. Okay, he cannot feign ignorance of any non-compliance. Okay, now how does he address this requirement? Is a great challenge. Okay, especially with 90%. Now, what is the requirement? In brief, I will tell you. We need actually a 3-hour session on this itself. Actually, in fact, one of the months actually you should do it. I can refer people who are specializing in this for the past 3 years. You should bring them up. It affects all the chartered accountants in practice, including smaller chartered accountants. In fact, smaller chartered accountants will be affected more because they are closer to the client. The clients share a lot of information with them. Okay, so it affects them a lot more if the standard becomes a thing. Fortunately, they may not be auditing listed entities, some of them. Okay, but if they, I'm sure they may be actually rendering other services to listed entities. They may not be auditors listed entities, but they will be actually rendering other services. In the course of other services, they may be aware of those non-compliances. Okay, so it affects everybody across the spectrum. Okay, in the profession. This particular one is very important. I think we need a separate session on it, but I'll briefly deal with them. Now, what happens is, when you are rendering a professional service, you became, or if you're working inside, I will add it, if you're working inside an organization as a professional accountant, you become aware of a non-compliance relating to law or regulations. This law and regulation is pretty wide. It is just not income tax law or Companies Act. Okay, it talks about laws. For instance, if there is a flagrant violation of environmental law, even that seems to be covered by that. I may not be an expert in the law, but I may be aware of the non-compliance of the law. Okay. Now, if you became aware of certain possible non-compliances, now what is the thing which I should do as a professional accountant? I will do briefly. There are 3 things which I will touch upon. First, I have to understand, discuss, and confirm. Third, remedy or rectify. Fourth, if necessary, disclose. I will put it in 4 particular buckets. Now, what is the first thing I should understand? Now, laws are prone to interpretations. Okay, there is a they have undergone. For instance, you take simple thing like Income Tax Act. I may have a view. The tax department may have a different view. They may come and say, look, you violated these income tax provisions. We will say, as a professional, no, there is no violation. This is an interpretation. So first we need to understand the issue which is involved. Okay. we need to understand and discuss confidently within the firm or within the appropriate forum or clients' places, especially. For instance, if there is an audit committee which is involved, you may actually refer to the audit committee and discuss with them what did they do. Okay. First of all, we should understand, look, there could be a possible violation. Okay. Is it a possible violation? You should actually ask the client to actually take the legal opinion. Okay. Is there a violation or not? Okay. The second thing is understand what is the consequence of those violations. Most of the violations we will find, it should be basically some fine needs to be there. Or for instance, even income tax, you have not done something, you can pay a particular additional tax or fine and then file a revised return. Those kind of things could also be there. Okay. Tax laws have a lot of provision relating to that. Or even in other cases, okay, we could actually rectify it. Suppose if there is an environment thing, if you have not done something, of effluent treatment plant, you could actually rectify it and by doing additional measures. Okay, so it is not that all the violations are resulting in something which is very significant or anything. Many of them could be remedied or rectified. Okay, so those things we need to understand, discuss, and identify what is the consequences of them. Okay, with the appropriate people. As chartered accountants, we may be experts in certain law, but we are not experts in all the law. Okay, but we need to understand whatever is these relevant laws which could happen. For instance, employee related laws which could actually affect your financial statement. We need to understand, we need to go to the legal experts how the law is interpreted. There are certain positions which are taken by the courts in the recent past. For instance, in the provident fund, what is a salary, what is wages. Okay, but past so many 50 years, people have taken a different position. Okay, now what is the implication of that? We need to understand, get the legal position. Okay, now discuss with those charged with the governance unless they themselves are involved. This is a very tricky thing, I tell you, in practical situations. Okay, now very often, suppose if you say managing director, very often if the owner, managing director or somebody, they may actually be told and they may be aware of certain consequences, certain position. Okay, now you cannot stop with the managing director because he is aware of it. As a professional, you need to go and tell them, explain to them the consequences of a non-compliance, okay, and how it needs to be remedied. Now, if it is a company, if it is a listed company or a finance company or other regulated entity where there is an audit committee, we need to take it to the audit committee and discuss what is their position. Because audit committee, which comprises of independent directors, are equally responsible. In fact, the first item which I have put is, it is the responsibility of the management to follow the law. Okay. It is only our responsibility if we come across certain non-compliances, what we need to do. That's what this code deals with it. Okay. But invariably we find now there is a lot of criticism on auditor. Now, how many times, if the accounts have not gone, people have gone and criticized the company. They have gone and actually first criticism is on auditors who gave a report on the auditors. The perception which is happening nowadays is very, very, very different. They say auditor is God. Okay. So they need to ensure everything is correct in the financial statement. If it is not correct, they need to report. Okay. So they feel the auditor's responsibility, the perception is much higher than the company itself. Okay. So in fact, the actual position is contrary. Even this, for instance, compliance of law is a management responsibility. Okay. If you read the audit report, it very clearly says it is the responsibility of the management to comply with all the accounting standards and regulation and other laws. Okay. The laws are also mentioned there in our audit report. But this new regulation, the new code which has come into play, is that if you become aware of it, you cannot keep quiet. Okay, look, because you will look at it in the past whether it affects your financial statement. We have an auditing standard on it, accounting standard on it, auditing standard on it. In case of the non-compliance of law, what you should do as an auditor. Okay, that is there. Okay, but this is going one step further. Now, the last part of it is going to be very, very tricky. The standard says you need to disclose the matter and put the exact word to an appropriate authority where required by law or regulation or where considered necessary in the public interest. Now, what is necessary in the public interest? God alone knows. Whether it is required by law. Now, any law which will say, look, if anyone who is any violation which is taken place, who is a party to the violation or who is aware of this violation is punishable and all those things, okay, they may say they are punishable, but they say they don't come and report there. They may not specifically say that. But if you are aware of a violation, in most cases, you become a party to the violation in many of the laws. Okay, it could be even criminal violation. Okay, so now what do we do in this thing? This is a very challenging thing. It needs what are the matters to be disclosed. There is a confidentiality clause. If you are not very certain, for instance, that there was a violation, complete violation, and you go and report to somebody, you may be actually sued by the client saying that you have violated my confidentiality and you have gone and reported something to the tax authorities, which is not actually a violation. You have interpreted the law on your own and you have gone and reported to the tax authority. He may actually sue you. It's a double-edged sword. You are supposed to follow it, but at the same time, if you follow it, you could be penalized from the other side. Okay, this is a new animal. It has not been tested even internationally. It has been, it's happening there internationally. The big companies and others have a lot of safeguard. They undertake so many things. They try to put in, for instance, you may actually ask for there is a secretarial audit. Okay, the secretarial auditor actually believes on the auditor. Now we may have to go the reverse way, that we are relying on the report of the secretarial auditor on compliance of law. We need to, possible, actually, we have not yet looked at it. I'm not sure whether the Institute Forum this has been discussed. We need to actually ask the secretarial auditor to split his report. Okay, you can rely on us for compliance with accounting standard, but we will rely on you on compliance of other law. Okay, Companies Act, FEMA, this, that. Their report is very wide. Okay, possibly we need to look at that. Okay, so we need to look at it. How do we match these two is going to be a challenge. Okay, so this particular thing, this has been dealt with in detail. Okay, there is a lot of literature which are available internationally, and there is quite a bit of educational material which has happened. How practically firms are looking at it. They are also putting into place their own, okay, how the individuals who are involved in the audit work, okay, they actually get a certificate from the individuals that they have not come across anything in their client. Because at the end of the day, knowledge of a particular non-compliance is individual. A person who is doing an audit or a person who is rendering a tax services may be aware of the non-compliance at the client side, but he might not have shared with anybody. Okay, so now how do you deal with the situations? So you need to put in place things from, you take from the particular all the individuals who are involved in individual assignments or individuals on a periodic basis, that no clause declaration. In fact, I remember to have done it even 3 years back. Okay, when we started having it there. Okay, there could be a no clause discrimination, and we need to actually disseminate this no clause to all the people who are in our organization. Okay, see, this code is actually not actually meant for partners. Actually, the code is for everyone who is involved in the audit. At the end of the day, an audit or even any assignment, tax position, okay, it has to actually go down to the individuals, the article assistant who is involved in the audit, because they are also covered by that. Okay, so they need to be told how to escalate matters when it comes. Okay, so this is a new requirement. We need to deal with in detail in a separate section, but be aware of this. There are certain important matters like confidentiality, which I dealt with, professional appointments. Now, even the code talks about various things in respect of professional appointment. Before accepting an appointment, what is the procedure which you need to follow? So there are things we need to do even before accepting the professional appointment, like ensuring that you are not landing up into a conflict of interest, you are not landing up in a self-review threat or a self-interest threat, even before appointment is taking place. Okay, because once you get appointed, you cannot go by and find out whether it is complied with or not, because you would have already violated the code. Okay, so that is all dealt with. Is there fees and other remuneration? There is a certain things on the fees which I have included. I will deal with it. Okay. But I dealt with it in the beginning. Then, this is very critical to find out. Quoting a lower fee may not be a threat, but it should not be so low that it might be difficult to perform the engagement objectively. This I am emphasizing again and again. Okay. Personally, I have seen we tend to underquote as a profession. We are not quoting fees which is at a required level. If someone else who comes from a third party who have reasonable knowledge of what is the work to be done, they come and look at our fees, they may actually say, look, how can you do the work at this fees? It is impossible, because it's very important now how others look at us rather than what we are looking at ourselves. They may come and tell, look, as I told you, there is a classic report of NEFRA which may deny, we may dispute, but has been written. There is a report, and there is a report which has been published, and that is there is a fellow professional who is involved in that report. Okay, they may conclude, look, how do you ensure quality with these fees? How do you ensure your independence, compliance with various standards you have got? It is not possible. Okay. So the fees is very, very important. Okay. In a competing professional and situation. In fact, we compete with non-professionals in other matters like valuation and others. Now, there is a challenge. There is a balance which we need to make in getting the work and ensuring that the fees is good enough to do the work. Okay, this has not been focused upon by professional, every kind of a professional, and that is going to become, okay, relative size. And there is another one which has come, relative size. Okay, I think I've got a slide on that. I will mention that. That is actually new, which will affect the smaller firms. The other part of this code is a lot of things on inducement. Okay, as a professional, including audit or assurance, it's more pronounced in that. Even when you are rendering other services, you are not supposed to accept hospitality, gift, entertainment from a client, okay, which are treated as inducement, and it could affect your objectivity. Okay, you may actually give a valuation report. Even then, that could be induced. A client's hospitality could affect the independent valuation which you are performing. Okay, you may be doing an assurance work on certifying certain things, certain portion of things. Okay, your inducement could be a threat. It may not be actually a threat. You may be actually not affected by those inducements, but it is clear, apparent, there is independence in appearance. We will come to it later. Okay, that is there in inducement. So these are all, in fact, prohibited by the institute ethics. Okay, some of the ethical standard. Even if you get, there are various guidelines from time to time which are issued. Okay, in fact, business relationship includes this. Okay, we will come into it in some details in something. Okay, now I'll deal this. Whatever we have discussed, there is an independent standard which has come, which was not there before. Okay, now this independent standard is in detail. Okay, it was there, but it was in very small thing. Now it is very detailed. This is based on the code of ethics. It is in fact almost ditto from the international ethics board, okay, of accountants. of which India is a part. Okay. Now, it also includes local regulatory requirements where necessary. This is also effective from July, except the three items which I told you. Now, what is independence? Now, this independence, our whole credibility as chartered accountants is coming because of our independence, I would say. When we do any professional work, okay, not only audit or assurance, even something like evaluations or any other study which is involved, okay, people want something of independent of the clients themselves. Okay. Now, independence of the mind means it is a state of mind that permits expression or a conclusion without being affected by the influence which compromise on your professional judgment. Okay, it allows the individual to act with integrity, act with objectivity, act with professional skepticism. We have dealt with these principles before. This is independence of the mind. Okay, that is one part of it. There is an independent of appearance. Okay, there are certain situations, certain facts that go in a significant manner where a person who is a third party may actually likely to conclude that your independence is affected by your relationship or by your financial interest in an organization or the work which you are undertaking for that particular organization. That is an independent in appearance. Okay, they may conclude because you are doing these work, your objectivity could be compromised. Might not have been compromised, but it could be compromised. Okay, your professional skepticism could be compromised. Okay, these are the circumstances which are actually now coming to the law, coming to our code, which has been specified because the whole law is to ensure that independent appearance is safeguarded, in the sense literally prohibited. Whatever is affecting threats to independence of appearance is prohibited. Now, entities to which independence applies. Independence things applies to all the entities. Okay, independence of mind. Any work which I do for any clients, I need to be independent. Someone don't need to come and tell me. You need to tell me as a part of law. Okay, but what is there? But in some of the clients, independence is most pronounced. Okay, one is audit clients and assurance client. It's much more pronounced. Okay, within the audit clients, which will deal with, because audit get a lot of flack on independence. Okay, it could be public interest entities and other entities. Now, why it is this public interest entities and other entities? Now, basically, this is the new term. Public interest entities are basically listed entities and entities respect of which the corporate governance and other independence requirement are required as if it is as equal to your listed entities. For instance, all our financial sector clients, banks and insurance entities, to give an example. Okay, all the financial sector clients which are controlled or regulated by various authorities like RBI or insurance regulator, they are all considered a public interest entities. So public interest entities, the level of independence which are required is a bit higher because public interest is involved. In a listed entity, there are outsiders who come and invest. They borrow from public. The investors from outside invest in it. Okay, the banks and lend in a big way to public interest entities. Okay, they are there. Other than public interest entities could also be looked at it. For instance, there could be additional entities which could be treated as, for instance, if they have borrowed heavily from a banks, okay, it could be treated as public interest entities, okay, or the banks may come and say, look, you follow this, okay. It has not yet come fully, but it will come in future, okay. For instance, finance companies, they need public money. They borrow from public, they borrow from others in a big way. Okay. Banks, they deal with public's money, deposits, they lend. Okay, their public is involved in every aspect of their transactions. Okay, so they are treated to be treated as public interest entities. Okay, this is how independence is structured. Okay, now the another part of a thing is independence is not only to the entities which you are associated with, it is to be followed with related entities of an audit client. Now, what is a related entities? It is defined. Okay, in the law also it comes. If you look at our law requirement, it says subsidiary as well as holding company. You need to follow the requirement. Okay, because they are related entities. Here, it's a much wider definition of related entities. Basically, in respect of listed client, it is direct or indirect control of the audit client or an entity over which the audit client has direct or indirect control. Okay. Basically, say, suppose my holding company or my subsidiary companies. Okay. That is two. Then, if I have a direct financial interest, okay, or someone has an indirect financial interest, and they could exercise a significant influence on the client, okay, and the audit is material, the audit client is material to them, okay, or the investment of that entity is material to the audit client, both sides, okay. So the similar way, if the entity over which the audit client has got a significant influence and that is material to the audit client or that particular entity, that is a related entity, okay. These are all falls out of judgment, okay. Control is not just shareholding, okay. Control could be other means. By management also, you can control it. Okay. So a related entity is like your tail of Hanuman. It can go long. Okay. So imagine you have to not only follow your independence requirement for the entity which you are auditing, but all the listed related entities of the listed entities. Take big groups. If you go and see some of the even Indian groups, big Indian groups, you will find there are something like 100, 150 entities which are there in that whole annual report. And lot of them are related entities. Okay. Lot of them either controlled by the entity or controlling the entity directly or indirectly. Now, you have to ensure the independence requirement for all those entities in a listed entity. So that makes it a lot more difficult. Okay. Other than listed entities, control are being controlled. That's the only thing which is there. Okay. Now, period when independence is required, it is an engagement period, means when I start the engagement and complete the engagement, or period covered by the financial statement. Now, this is a bit tricky. Now, as an auditor, I may be appointed during the mid-year, okay, during the year itself. For instance, the AGM could be happening anytime before September, okay, but I will be appointed as the auditor for that year, okay. So this is a tricky thing in practice, okay. Now, whether I should ensure, even if before I have actually I have responded to the inquiry of an audit, I need to start following the independence principle. Or the moment I come to know of I being appointed, I should ensure all the independence before the appointment is done, all the independence requirements which are required, especially of financial interest. We have come across it in 2017, where there was a huge change of auditors. My God, there is a lot of work which went into the financial interest. Okay. People may be holding shares, people may be holding things, people may have relatives. Okay. You can understand, but you don't know whether you're going to get an audit. You can't ask people to sell all the investments. You can't ask them to not to pay or ask them to change the jobs and all those stuff. It was a big exercise which a lot of firms went through in 2017 when this period covered by the financial statement, the transition period. Okay, that is what is normally required. Okay, now what are the independence requirement? Let me tell you, I will have one slide on that on the Companies Act. Okay, some of this may not be as stringent as the Companies Act. Some of them may be wider than the Companies Act. Okay, but let us see what the code looks at. Financial interest, you are not supposed to have a direct or a material direct financial interest in the audit client. including related entities. It should not be held by the firm, audit team member, or any of that individual's immediate family. Okay. Now the immediate family is very tricky. Immediate family is your spouse or someone who is your dependent spouse or spousal equivalent. Okay. Now you may not have got married to them. If someone is these days, there is a term which is used in accounting and auditing standard called domestic partner. A domestic partner is a spousal equivalent. Even they will be covered. I can tell you half an hour on that domestic partner, not in this forum. Okay, or dependent. Now there is a challenge. Nowadays, we have got people who are employed. They are independent financially, husband and wife. Now you need to how do you know your spouse is gone and invested somewhere? He has got a financial interest. He may not share it with you on a day-to-day basis, but there is a challenge. Okay, his financial interest is also covered in this. Okay, you need to practically look at it and how do you fulfill it. Other parties in the office of the of the engagement partner. Suppose if say Bangalore office is in charge of the audit, okay, the other senior people in that office are all covered, okay, and they are individuals' immediate family. Okay, these are all tricky. Other partner or managerial employee who provide non-audit services to the client also. Okay, anybody who is rendering non-audit services may also be covered by this financial interest of an audit client. Okay, in case of statutory audit under 141, Companies Act specifically prohibits any financial interest by the partners in an audit client. Okay, and in case of others, it can have the any securities you can hold up to 1 lakh or something like that. Okay, in respect of loan, it could be about 5 lakhs. In respect of guarantee, again, it could be 1 lakh. Okay, but in respect of shares and other things, it's prohibited. Okay, this is the loans and guarantees. Again, loans and guarantees are actually prohibited. The words which are used is not permitted unless under normal terms and conditions. Okay, better if you are an audit client, don't take a loan from the banks in which you are auditing. If you already have a loan, ensure that it fits into your independence requirement or company law requirement. Okay, the company law has a requirement of 5 lakhs. Okay, now even people who are doing branch audit of a bank, if it is a company, we may have to follow that. Okay, they may have different things. So if you are doing a branch audit, you need to look at it whether you are following these regulations. You need to have if you have got any doubt, please respond. Please request the institute or our board to for clarification. It's all available. Okay, in respect of institution, it's not a bank. Again, it's not permitted. Okay, unless a normal term. The problem with this normal term is you need to actually prove that you follow the same thing which are applicable to others. For instance, if you are taking a loan, you may be actually got a lower rate of interest because you are credit rating. Okay, but we need to prove that it is normal. When the interest rate goes down, your interest rate may be reduced. Now you need to ensure sufficient documentation to ensure this is normal. Everyone's interest rates have come down. Okay, so there are challenges if you have loans. So it's better to avoid the loans as far as possible. Deposit or brokerage account. Again, it is in the normal terms and conditions. It's permitted. Okay, but significant deposits or significant brokerage account, we will advise that you avoid it. Brokerage is the client doesn't do anything. Just it's all now online. It may not be lesser of a problem, but deposits, it could be a problem. For instance, just to give an example, in SEC requirement is you cannot have a deposit more than what is covered by insurance. For instance, in banks, 5 lakhs is the insurance. If it is a SEC restricted entity where the shares are or securities are listed in the US stock exchanges, you cannot have deposits more than 5 lakhs. Just to give a practical example, we became a part of the another firm, member firm. The first thing I did was to close my bank account with a bank. Okay, they were very upset. I said, look, I can't ensure that my balance will be below this. Okay, I will go and put a deposit. Then I will be violating my independence requirement in SEC. Okay, so even deposit and brokerage account, we need to be a bit careful. Business relationship. Now, business relationship and transactions, there may not be a prohibition. Okay, now except professional services, there is a prohibition in respect of certain things if it is not significant. Okay, but the Companies Act prohibits it. Okay, unless it is actually permitted by the institute, exceptions. Okay, now for instance, what are the exceptions are there? Let us see exceptions rather than what is to be followed. Suppose I have an audit client. If I'm auditing a telecom company, possibly I can have my phone connection with the same telecom company, but ensuring that my outstanding doesn't go above what is under the Companies Act. Okay. Now, I may be actually buying things which are small things from that company, may not be directly, indirectly. Okay. My day-to-day requirement. Okay. Or an airline. I may be an auditor of airline. It's not prohibited. Okay. That I need not fly in the airline. I can use the services of the airline, but provided I should not be given special benefits in the airline with the same requirement, same thing which is available to all, same discounts available to all, I should do it. The third, which is there in the institute, which has been allowed, is hospitality, basically hotels or hospitals. In fact, when I was going to explain one of the senior persons, a well-known person, chairman of a hospital, I was explaining him the independent requirements. He asked me, do you mean to say that I can't treat you? You can't take treatment in my hospital? I had explained to him, yes, no, I can take treatment in your hospital, but the same terms and conditions which are applicable to other patients. Okay, same way if you are taking a thing in respect of any lodge and other things, you can do it. Institute permits it, but better to ensure that you pay as and when you use them. You don't take unnecessary discounts, unnecessary schemes. You don't get into it. Okay, because especially Companies Act, if you violate them, you get you are in fact become ceased to be the auditor. Okay, that's the kind of thing in Companies Act. Okay, family and personal relationship. Now you cannot, immediate family person will not be a director or officer, an employee, or a significant position or a position of significant influence during the period of engagement or a financial statements. Okay, for instance, if there is an auditor, his wife can't be the CFO. Simple. You cannot do that. Or a CEO or something like that. Okay. That is prohibited. Okay. Now, when I have this personal relationship, there is something which is not even dealt with by this code, which I have come across practically. In fact, in a couple of cases, when I got into an audit relationship, okay, when we got the audits, I found, in fact, a couple of cases, my friends were there in a position of significant position. Okay, if you look at it, there is nothing in this whole code which talks about friends. Now, friends are not defined. Okay, but I felt they are too close friends to me. Okay, and they are not friends arising out of my professional relationship or professional services. They came out of my past relationship. I said, look to my independent director boss, independent partner, that I will not, or my people, that I will not undertake that audit because I have people who I have got close friends with. Okay, this is beyond the code, I would say. Okay, there is nowhere in the code you will find this friends being specified. Okay, I said no. I am too familiar to them. They are in a position of influence on their organizations. So I will not take up the assignment as an audit partner. Okay. So this has happened. Okay. This is beyond the code. I said in principle, I would like to follow professional ethics. Okay. This is following it in principle. Okay. So that could happen. Employment relationship, normally all partner staff prohibited. I think There is a cooling period. Whether I can become a director of a company as soon as my audit work is over? No, it is not possible. There is a cooling period of 2 years and 3 years which are involved. If you're if it is 3 years for independent director, 2 years for other directors which are there. Okay, it is there. Former audit team members, threats and safeguards. Okay, there has to be a threat of safeguard because we need to ensure that their independence is not affected. For instance, if somebody who is in the audit team offered a job in an audit chain immediately, there could be a perception of independence being affected. So the moment they get into this kind of a discussion, they should be removed from the audit team. They should be removed from the audit team, and they no longer has a relationship with the client. Those kind of safeguards we need to build up. We need to identify the threats. We need to safeguard in respect of the employees. Okay. Employment of relatives. This is a bit more tricky. Immediate family members. Okay. It is not necessary if you audit a big entity, your immediate family member may be actually there, but you need to understand at what position they are there. Okay, they are into some technical thing in some place, and you are auditing financial statement, and they are not in such a senior position. It may not get affected. It may not be affected. Okay. So, but the people who are doing the audit should not be their immediate family member should not be an officer or a director. Okay, or in a position to exert influence. That's important. These may not actually affect your independence, but it seems to be affecting your independence. There is a perception. Okay, this is a threat to your independence in appearance, what I will call it. Okay, then there are close family members. There is a bigger circle. Close family members are basically your parents, children, or your sibling who are not immediate family members. Your brothers and sisters, your father, mother, your son, daughter, all those people. Okay, they are also covered in this. Okay, we need to look at the threats and safeguards. Long association of personnel. This is what we were seeing in the beginning on audit rotation. This has given rise to audit rotation. Okay, non-PIEs is of lesser issues. The threats and safeguards need to be followed. PIEs we don't need to discuss. Rotation has become mandatory. Okay, even before the rotation is there, the code talks about rotation of the audit partner within the firm. Okay, the audit partner, for instance, NBFCs had a rotation of audit partners every 3 years, which was a requirement in one of the guidelines of Reserve Bank of India. Okay, it was there quite some time before, about 3-4 years before, it was there. Okay, it was not there as circular. It said to the company that as a good corporate governance, you should ensure that the firm rotates its audit partner every 3 years. Okay, so we put in our firm as a good policy that in NBFCs, all the bigger NBFCs, the audit partner will be rotated every 3 years, okay, which was followed even before this rotation came of the firm itself. Okay, so even the significant audit members, an audit manager, or who is in charge of an audit at a senior level, they need to be rotated in a periodic manner. Okay, now, so cooling period for engagement partner is 5 years, which is same as in the Companies Act. Whoever is performing engagement quality control role, a person who is performing a quality control is treated on par with the partner. The NAFRA has treated them that they are assuring that quality control is followed. They have got the same responsibility of the audit partner himself. Okay, this is a bit new but that's the position which NAFRA has taken. Okay, in certain decision which they have taken, that they say they are equally responsible. So the same thing appears for the audit rotating partner for EQCR. Here it says 3 years. I will say you may apply even 5 years for an EQCR. Okay. The other key audit partners who are involved, they may be involved in some decision making or consultation. The rotation period is 2 years. But I would suggest a longer period in respect of the listed company. If the Companies Act is much more tougher. Okay. Non-assurance services. Now, I have actually put in there But I would say this, you don't take it. Many cases it's prohibited. In respect of companies, it is prohibited in a lot of cases. Companies is not distinguished by listed and non-listed companies. If you go to the Companies Act, it talks about the auditor should not perform this function. It doesn't bifurcate PIE or not PIE. There is no such bifurcation there. Accounting and bookkeeping of services, it is actually prohibited under the Companies Act, so there is no need of discussion. Okay, Companies Act prohibits an auditor not to render accounting and bookkeeping services. This is a tricky thing. If you are doing a bookkeeping or some work for a company, please ensure that this is followed. Okay, even though the code permits it in certain cases in non-PIEs, okay, Companies Act prohibits it. Okay, so very often the smaller companies in the group, we may be maintaining accounts or bookkeeping or rendering some assistance and all those stuff. I think we need to ensure that we are independent of them. We don't render the services. You can actually follow a system. You identify. You don't do audit for the people who you are doing accounting and bookkeeping. You ensure that some other firm is doing bookkeeping and other services. You can have an arrangement in some manner or something like that you can follow, but you ensure that you are independent as an auditor. Administrative services. Now, these administrative services is permitted in some cases, not permitted, but there is one clause in the Companies Act is called management services. The way the regulator is interpreting the management services, any services of management or to a management is management services for them. So administrative services, it says is management services. Administration is management. Okay. So under the Companies Act, I would say it's prohibited. Okay. Don't bother about these, what is there in this. Valuation services, it is prohibited under the Companies Act. It is prohibited under the code. Okay. Tax return preparation services, it's permitted in both cases. There are threats and safeguards. You tell the clients take the responsibility of what is offering, what is the position he takes, and then you need to do. Tax calculation is prohibited. Okay, it's a bit tricky. Okay, now we can say tax calculation is not done by me, it's all done by the system. Okay, you can do that, but you need to ensure that the client personnel is made aware of the entire thing. In the things you need to put notes and other things in the in respect of the figures which are going into the return, and ensure somebody senior, somebody in the organization who actually clears it. It should be the position of the company, not your position as an advisor or the preparer or return submitter. Okay. Now, tax planning, it's prohibited. I would say it is prohibited. Okay. In other services, it is creating, it is permitted, it says, in some cases, but this is actually a nightmare of the regulator. The regulator often comes and the thing. If you are advising a tax client on certain tax planning, you are stepping into their shoes. Okay, even though they may be taking their decision, you are actually telling them how to reduce your tax. Okay, and one angle, the regulator is very unhappy because you are planning and reducing their tax in some manner. Okay, the other angle they are telling is, look, you are actually getting into the management position. Okay, and you are advising the planning itself. Okay, you can advise them what is allowed, what is not allowed, but if you are entering in from tax advice to tax planning, there is a challenge. Okay, there is a challenge. Okay, now, so the tax things which you may be doing to restricted entities, you need to look at it closely, especially in respect of companies or listed companies. Okay, definitely a listed company, and no. Many of the bigger firms have taken a call. They will not render tax services to the listed entities. A few years back, based on certain things which has happened, they say we will not take. We will ensure that our tax clients are rotated out. Okay. Now, tax services involved valuations. I would say this is a challenge for the listed entities or any companies because valuation services are prohibited under the Companies Act. The Companies Act will come and say, look, if you are doing a valuation for a tax purposes, even that also is a valuation services. So even though the code says it may be permitted in the circumstances, I would say under the Companies Act, it is not permitted. Now, this point is very important. Assistant in relation to tax disputes. Now, this is what is going to be prohibited. Now, what it says is, they say that you cannot act as an advocate before a court if amounts involved are material. Now, it's very difficult to talk about materiality, because if the matter has gone to a court, it needs to be material. Otherwise, why would somebody go to a court? Now, the forum court, for instance, tribunals, tax tribunal is a quasi-judicial body. It is a part of the court. Okay, internationally in a professional thing, a tribunal is being recognized as a quasi-judicial authority. So you may not be able to represent your clients in a tribunal if the amount involved is material. This amount involved in material is irrelevant, because only if it is material you will go to tribunal. You don't go to tribunal for non-material amounts anyway. Okay, so this services is being prohibited. Now this is being deferred 30th September. Okay, it is already being followed by many of the bigger firms. Okay, for a long time, but we need to ensure that we need to look at the tax services in detail. Okay, I would say a single important agenda for various practitioners is to look at their tax services. Okay, in the next few months, how do you ensure that you are within this code before the code kicks in September? Okay, internal audit services are prohibited. Information technology services is prohibited, especially under the Companies Act, because you are now supposed to give a report on internal control, and this information systems is a very important part of the internal control, is an important part of the preparation of the financial statement. So you cannot do any work relating to the information technology services. Okay, others are litigation, legal, recruitment. Okay, these are also some prohibited, some of them not. Non-assurance services also, they are all prohibited. Corporate financial, you cannot render investment advisory services, dealing or underwriting of an audit client. Okay, temporary personal assignments, this is a gray area, it's a tricky area. Okay, for instance, in our firm, any temporary personal assignment of staff is being, we are not permitting, because we feel there is a gray area to find out what is it being treated as a management services. You need to go and prove the guy who is personally assigned, he is not in a managerial role. Okay, he is doing only some clerical job and he is not involved all kinds of things. Okay, so managerial services is a very tricky area because it's not defined. There is no literature available. It is there in the Companies Act. So the interpretation not with you, but with the regulator. Okay, so anything which is in the realm of management services, we need to be careful. Okay, now this is all these management responsibilities. Okay, even though the code has bifurcated what is management responsibility, what is management, not a management responsibility, I would exercise caution, because what is prohibited, the word management services is not defined. The regulators seem to be interpreting it differently. They were actually been telling, if you are rendering any service to the management, is management services. It's services to management is management services. That means anything. Okay, so we need to be careful with this. Even though it is being defined, I would say it is more than what is defined here. Okay. Now, I will go straight to this section 144. We need to be very careful. We need to closely understand what it is. Okay. Accounting and bookkeeping services prohibited. The important thing is prohibited not only to the audit client, it's subsidiary company and holding company. Okay. And all related entities. Internal audit, design and implementation of any financial information system. Okay. Now we were looking at it as a prohibited only if the financial information system. Here it says any information system. It's very difficult to check any system and say it doesn't enter into my financial statements. Okay, so don't get into that. Actuarial investment, normally we don't provide. Okay, rendering of outsourced financial services. Now, this is where I told you, outsourced financial services could be anything. Okay, so you even if assign people for some clerical work, it could be rendering of outsourced financial services that could be treated. Okay, so this is a wide term. Okay, so any services, and it's very important. Any firm, in fact, even the smaller firms may be rendering services. Okay, we need to be very careful with that, because the client, for the audit client, its auditor is a ready-made resource for these kind of services. Suppose something goes wrong, bank reconciliation, they will just say, pull out, give me some people, I want to reconcile, because he knows the people are all well educated, they know what it be done. Okay, so there is practically, there could be a sensitive area, we may be, without realizing, we may be rendering that. Management services, as I told you, it's not defined. Okay, people tend to interpret saying this, what the standard or a code interprets is stepping into the shoes of the management and rendering the service. Okay, that is what is being treated as management services supposed to be. Are you taking the management responsibility? That is what is defined. But what is being seen to be interpreted by these things, they will say, look, this is Companies Act. We don't bother about what your institute says or what your accounting thing says. Hey, for us, management services is service to management. Okay, it's been told. Okay, so we have to be careful with that. Any other kinds of services which may be prescribed in future, I'm not sure anything has come. Okay, breaches of independence, we need to end or suspend, eliminate the relationship if required. If their breaches are not significant enough, it could be rectified. As soon as you come across, you need to identify the cause, the breach, effect, and need to be rectifying it. Okay, but in every case, you need to communicate the breach to those which cooperate with those governors. Okay, the important thing is to maintain documentation relating to the compliance and relating to the breach. Okay, now when the regulators come and inspect, they are aware there could be some breaches. For instance, one employee had gone and some invested in some shares or something, okay, or something is there. You come to know later, okay. No, it can happen not because of anything, because of subsequent relationship. For instance, some wife is being working and suddenly she gets some shares as ESOP. There could be a violation, okay. There could be a breaches, but which could be rectified immediately. But they all need to be documented and could be acted upon. Okay, the regulator appreciates saying that, look, this was a breach. We immediately acted upon it. They appreciate it better rather than saying I don't have any record for compliance and breach. Okay, so this is what is practically which is happening. Okay, and they appreciate it better if you report the breach. Fees. This is very important. I think this is one of the last things which I will see. This is a new animal which is coming in September. The thing which says if your fees of an audit client form part of a large proportion of your total fees of the firm, okay, it could hamper your independence. Now, if you are going to be dependent on so much of a particular client, now it could affect your independence. It could impact your objectivity. It could be biased not to lose a client. So this is being treated. This will affect a lot of clients who may have some core client, maybe giving them quite a bit of fees. That it is a challenge. Okay. Now, what is this significant fee? It talks about 2 consecutive more than 50% of your total fees. Okay. Only saving grace is if your fees is less than 5 lakhs, this is exempted. Okay. Means you are a smaller firm or exempted. Okay. If it is less than 5 lakhs of fees, okay, you must be smaller. Okay. But the way we are practicing, everybody must be having much higher fees. Okay. So you need to be bothered about the fees. You need to look at the fees of your clients in relation to your total fees, whether anything which could be falling into this category. Okay, how do you mitigate it? The other point is fees which is overdue. Many of them are not aware. If your audit fees is overdue for more than 1 year, before you sign the next year's audit report, it is treated as affecting, it could affect your independence or objectivity. You need to take precaution. It's not that it is prohibited, you can't do much about it. For instance, you need to take steps to recover it. You need to, within the firm, you need to get into additional review. Somebody who is not involved in the audit reviews your work and says, look, the fee is not affected. I would say a guy who has not paid the fees for 2 years, you better resign and go. He is a bad debt. Okay, he's a bad debt. You may be looking at it. Okay. And in fact, a practical suggestion for people, you please quote this clause to all your clients. You recover the fees. I have always quoted this clause to the client. Well, this is your clause. If you don't pay the fees, I can't issue the audit report. Or even if I issue the audit report, I need to quit. If I need to quit, before you appoint another auditor, you need to ensure all my fees is paid off. Okay? It's a nice practical thing to quote to various clients. So anyway, they may be in financial difficulty. You may be the last in the queue for your fees. Okay? You need to quote them this clause. Okay? When it affects your independence, I have got a challenge. Okay? There are quality controls parameters. I won't deal with in details. It is not necessary. These are all very significant requirements. Any firm need to put into place quality control positions within themselves to ensure that the code of conduct is followed. Okay, there is a tone at the top. There is need of a training. There is a knowledge management. There is a consultation network within the firm. Okay, what are the tools which you are using? For instance, how do you know others are investing? And how do you know when they invest, they don't ensure that the independence is not followed? Okay. So we have bigger firms have got a SIM before I independent. You can go and click whether I can get approval, whether I can invest here and there or not. So there are sophisticated tools which are built into the system. Okay. So the tools, IT tools are very important. Monitoring. So is there a people who are monitoring that everybody in the organizations are following the independent rule? Okay. In fact, every firm need to have at least a couple of people identified who must be in charge of this requirement, who must be spending a part of their time, significant part of their time based on the requirement, responsible for adherence to these principles. Okay. Disciplinary process. Within the thing, if some employee violates it, what is the disciplinary process you are following? You put in place. Okay, you pay them the fine or put them something, or your promotion could be affected, your partner's salary could be affected, partner's percentage could be affected. So many things could be put in place. They are already been put in place in many of the firms. Okay, and that policy and guidelines should be there as the core for ensuring all these being done. So there is quite a bit of work which we need to be done in this regard, which we may not have done it because it doesn't involve rendering services to the clients. We need to put in places. This is becoming very, very important. The code is now mandatory. Everyone is aware of the code and everyone is interpreting the code. Okay. So they will say straight away, what is the systems you have put in place for quality control? Now there is a challenge. We need to put in place a quality control. This is not something new. It was there. Now the requirement is a bit more. Okay. Now this quality control will be reviewed when there is a QRB review. If there is an external review, NFRA reviews, they will come and review what is your quality control in respect of the code of conduct. Now without a quality control, if you are going and certifying that I have followed the code of conduct in your report, then it says, what is the basis of your report? So following this quality control is important. Following the entire code is important because in many cases, especially in companies, we are actually certifying voluntarily and by law that this code is followed. Okay. So this is not something which is optional. This is not something which is recommended. This is not something which you can call it as a good practice. This is mandatory. This needs to be strictly followed. And some of them are very tricky to follow. This is not like your even accounting standard where it could be either here or there. Okay, it needs a lot of discussion. You can even consult outsider without mentioning the client. This is a threat. There is no harm. Okay. In fact, I personally, some people come to me and ask, look, can I do this? Can I do that? Without mentioning the client, I do actually tell them. Okay. So it is important. You may have a professional forum where you can consult without affecting the confidentiality. Okay. So this is very, very important. We have taken this for granted for some reason. And now I believe that this has become important. I think we need to focus on it. We need to put effort on it. I am sure every other firm will actually need to do some work, especially, for instance, even some areas which are going to become mandatory from September 30. We need to ensure that they are followed. Apart from that, on a broader principle, a code of ethics is what is the base or basement of the whole profession. The credibility of the profession stands on your ethics, not on your knowledge. The moment ethics is not followed, whatever be your knowledge or advice is not recognized. So ethics is a core and we need to follow it in toto in every aspect of your profession. Well, that's my opinion. That's what I learned in a long 35 years of career. Okay, anything which affects, I said nothing doing. If even if it is not one, it is very difficult in a relationship, very difficult for within the firm or something. I said nothing doing. Okay, if it affects the ethics, that's what my firm stands for. Wherever we come across, okay. So ethics, there is nothing. It's a zero tolerance. Okay, I think that's how we need to follow the ethics. If you have any questions, I'm sure I overshot by 5 minutes, but it's a very big subject. Okay. You can reach out to me. I can send me the questions also. If any questions are there, I can answer.
Currently, there are no questions, sir.
Yeah, okay. Okay, that no questions means people have not followed it much.
No, I think it's other way around, sir. They have followed so much, to be really frank.
Okay.
Yeah.
Okay. Now, I will actually suggest before going out, I will suggest you go to the if you go to the magazine, go to the institute website, go to the Know Your Ethics. If you click on that, there is a lot of things on FAQ, which is very nice actually. So it will actually be nice to see. You can just see 5 minutes. You can read each journal. It's coming in each of the journals. Many months it has been published. For some reason, I don't know whether it is. I'm not reading the current journals. Maybe it's not come in the recent journal. The last one which I saw on the website was January. The others don't seem to have been updated. It's very good. It's very good. It talks about practical situations and then say what is the ethics standard or the things of Chartered Accountants Act which are not followed. Okay. So the Chartered Accountant Act is the Bible for us based on which this has all been done. Okay. So that is in the volume 2. I have not dealt with this. Okay. It has not changed, but it is there. Okay. So please look at it. Please look at, disseminate the information, not only as partner, this needs knowledge across the firm. So actually, internally, or possibly we need to have a course on this within the chapter, for instance, for anyone who are the employees of the chartered accountants who can attend it, kind of a things. Okay. So, and some of the things which are coming, the specialized one, which are actually coming on September 30th, I think we need to have a special section to make people aware, especially tax services, no clerk, fees. These three, which have been deferred because it's a bit difficult. We are finding practically a lot difficulty. People have not put in systems in place for following it. Okay. I think we need to actually have a couple of sections in detail on these things, maybe in the future. In fact, there are people I can ask people to come. Okay. There are people who have done ransacked those regulations carefully. Okay. And also putting systems in place to follow that. They could be of much use to you. Okay. Thank you. Thank you very much. Thank you, Pramod, for giving me the opportunity. In fact, I'm actually not doing much of the professional work. I am
It's,
actually
it's a
doing
pleasure,
a lot
sir.
of retired life. But I felt it is my duty to share what I have learned. Everybody was telling, boss, you've got so much of things, you need to at least share the experience. It was an opportunity to share what I not only learned here, learned in practice for so many years. I thank all the people who were there on the call patiently to listen to this in a Saturday evening, 6 to 8. Okay.
Yes, sir.
Thank you all.
Thank you. Thank you, sir. It was indeed, we have come to an end of excellent session. Definitely, I thought you would be the right person whom, I mean, I personally learned ethics from. So I thought I would like to invite you. And it was a special privilege of inviting you here, sir. I definitely thank you for taking out your time and giving us your valuable insights on it. And I also thank each one of the members who were present here and given their patient hearing on this. Of course, thank you everyone. On behalf of Bangalore branch of SISC, I thank each one of you. Good night. Good night, sir.
Thank you. Thank you.